there's a few technical and operational challenges faced by insurers. Firstly, their product set is complex and geared towards humans actually selling to humans. The complexity of the products make it difficult for someone in a digital environment to understand the products, understand the differences in the products between particular insurers, and make their own selections. So they have to simplify that product set. And also, often the duration and the cost creates fear in the customer. Not everyone wants to buy a product that's going to commit them for 20 years. The next thing is their legacy systems. They're confronted by, they have legacy systems, some of which were built in the 80s, that they're still using to process today. These are not digital friendly. They're difficult to integrate with, they're difficult to change, and that creates long product cycles. So when you have, if they want to launch a new product, they've got this legacy system that they have to work with, and when they make changes and implement it, it's going to take a long time because they can't break any other thing which they've done since the 1980s. So they need to change some of these aspects in order to become more digital, to be able to work with the new digital providers that exist in the world, that are starting to develop in Asia today. There's two groups that are developing in Asia that are being underserved by the insurers. The first is the millennial-minded individuals. I think that's the best way to say it. People who want to work digitally. They don't want to have 3 meetings with an agent in order to buy a life insurance policy. They want to go online. They want to understand what people like them did and what their experience has been with different insurers, and understand which product is right for them and execute and service themselves online. And the insurance industry is not shaped to do that at the moment. The second group is the developing middle class of Asia. These people are under the level that the current insurance model can actually effectively service. It costs a lot, even in a developing country, to put an agent on the street and go out and service individuals. And there's a developing middle class that are ready for insurance, but it's not cost effective to insure in the current model. They're also a very digitally savvy group of people. They all have mobile phones. And so they're an ideal group to actually find a different approach, a different channel to service. It's applicable to insurance because it is highly regulated. There are a number of qualities that the blockchain brings that actually are the sorts of qualities you want in a regulated environment. So firstly, it's a distributed ledger to all parties on the blockchain. So everyone is looking at the same information, removing the conflict in the industry over reconciliations of commissions, clients' portfolios, even clients' current addresses, etc. Secondly, all of the participants trust that state. They know that the view they have of the information is identical to the other participants. And they also know the blockchain is immutable, and so they know that all of the transactions that led to that state cannot be changed. So it creates a trusted environment that's perfect for a highly regulated environment. They're looking at blockchain to try and understand what it can do for their business, what changes economically this is going to make, and what new markets this has got the potential to open up. I don't think it'll be until next year that we'll actually see the first implementations.